Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Bionano Genomics. I will go over a summary of the company, its product offerings, recent news, financials, analyst projections, and give it my buy, hold, or sell recommendation. So let's get right into it. So Bionano is a genome analysis company, and it provides tools and services based on its Sapphire system to scientists and clinicians conducting genetic research and patient testing and providing diagnostic testing for those with autism's spectrum disorder, or what's called as ASD, and other neurodevelopmental disabilities through its Lineagen business. Now, Bionano's Sapphire system is a research-only platform for ultra-sensitive and ultra-specific structural variations, and enables researchers and clinicians to accelerate the search for new diagnostic and therapeutic targets to streamline the study and changes in chromosomes, which is known as cytogenetics. The Sapphire system is comprised of an instrument, chip, consumables, reagents, and a suite of data analysis tools and genome analysis services to provide access to data generated by the Sapphire system for researchers who prefer not to adopt the Sapphire system in their labs. Now, Lineagen has been providing genetic testing services to families and their healthcare providers for over 9 years now, and has performed over 65,000 tests for those with neurodevelopmental concerns. So basically, their main product is the Sapphire system, and it's for research use only per FDA licensing and approval currently completed on the system and tests it performs. The company also sells kits instead of systems for smaller testing needs where a full system is not really warranted. Now, upon the purchase of Lineagen back in August of 2020, the company began offering the now wholly owned subsidiaries First Step Plus genetic testing for individuals with autism spectrum disorder and other developmental delays. So let's go ahead and look at some news of the company. Back in December 30th, NASDAQ gave the company until June 28th to get its stock price up above $1 per share, and it definitely hit that mark. The company was thinking about doing a reverse stock split, but investors balked at that idea, and the company ultimately did not go down that approach. Now, yesterday specifically, Bionano announced it's the last day of its 5-day next generation Genomics Symposium featuring presentations by members of COVID-19 post-genome structural variant consortium using the Sapphire system for optical genome mapping to analyze genomes of patients with the severe COVID-19 disease. Now, these presentations by scientists and clinicians from leading hospitals and research institutions in Europe and the US showed that Sapphire was able to detect structural variants that may predispose to severe or mild COVID-19 disease, which had not been identified previously by large studies using the next generation sequencing, or NGS, or array methods to analyze genomic variation. So this is definitely good news for the company, and positive reviews from these doctors have investors overly excited about the genome testing company's growth prospects, but I'll definitely get into all of that. So let's go ahead and do some fundamentals, look at some of the fundamentals of the company. The company's current market capitalization is about 1.92 billion at the current point in time. It has seen a drastic increase in its stock price from December at around 55 cents a share all the way to its all-time high right now at $9.12 a share, or most recent high. Now, the company's revenues have been increasing from 2016 to 2018, going from 6 million to 12 million. But then it dipped back down to 10 million in 2019. That's a decrease of about 15.59%. The company will announce the 2020 earnings around March 4th, 2021. And as you can see here, it definitely had a massive increase right here, almost unrealistic when you look at it, how it could just do this. But let's look at the earnings per share right now is negative, but it has been positive side of decreasing from a negative $1.99 a share back in 2019, and it's projected to have a negative 39 cents or 41 cents a share this year in 2020. The 2021 projections have the earnings per share to be around negative 21 cents a share. Now, the revenue is forecasted to grow about 43% per year next year onward, and I do agree with that analysis. Has a 1 year of a cash runaway, so that's not good. I mean, they definitely need a lot of cash on hand because of the research and development they do. This is the highly volatile stock, and it's been over the past, let's say, month and a half now. Shareholders have been substantially diluted in the past year, and I'll get into that. Now, it's currently unprofitable and is not forecasted to become profitable over the next 3 years. It's more volatile than 90% of US stocks over the past 3 months, typically moving around 50% a week, plus or minus. It exceeded the US life sciences industry, which returned 45.7% over the past year. And it's overvalued based on its price to book ratio of 85.2 times. Compare that number to the US life sciences industry average of only 8.4 times. So you can see here that's very drastically overvalued. Now let's look at forward projections. Now the revenue for 2020 is projected to be around 10.13 million with a negative about 30 million in earnings. The revenue projections increase, and by the end of 2025, it should have 161 million in revenues and earnings around 81 million. Now that increase in profitability kind of breaks even around 2024. So you have about 3 years of being in the red. And then by 2024, it's projected to actually be positive. And with 2025 having $81 million in earnings, that's definitely good projections. Now let's see what the analysts have to say. Now, there are two with a buy, there's one a hold, and one a sell. The price targets, and get this everybody, the price targets for this company have it on the high side of only $2 a share. And let me do the 1 month overall right here. So the high target's at $2 a share, a low side of 75 cents a share, and a target price of $1.42. I got to say, it's definitely drastically above that projection. Zacks Ranked upgraded the stock to a buy because of the reflection of the upward trend in earnings estimates. But at the current moment, Zacks Ranks moved it from a buy to a sell position on this particular stock. Now, upgrading the future estimates, which I have to say is probably one of the most powerful forces impacting stock prices in the short term. And it definitely had a favorable impact on the stock price recently over the past month. Now, what has been driving this drastic price increase? Now, there are a few factors that I see in this one in particular. Now, the estimated future earnings potential increase definitely has a direct correlation on its near-term price movement of the stock. This implies a movement in the company underlying business, which is good. So projected future earnings definitely have an impact on current market price. We all know that. Analysts have been steadily raising their estimates of Bionano Genomics over the past 3 months. But Bionano took its stock price gains as a chance to bolster its cash reserves by about 100 million or so via a stock sale. It's now strong. It now has a stronger balance sheet, and the excitement around Sapphire places Bionano in a more solid position from which to operate. So, what do I think? Do I think it's a buy, hold, or sell recommendation? But here are my thoughts before I actually give you that analysis. Bionano has been on a wild ride, shooting to the moon as of today. One could imagine even going higher. I mean, I can't, but some people could. I have issues with recent and potential massive dilution of the shares, decreasing revenue over the past 2 years now, and even though it's projected to increase in the future, the unprofitability projected over the next 3 years. Pure speculative trading has took the momentum of the stock into unrealistic and unsustainable stock valuations. Also, people are commenting wildly on these message boards saying easy money, 100 times stock price with rapid trading. I mean, the news out there, the noise out there is crazy, saying this is the next one going to the moon. But if you look at the fundamentals, you say, no, it's not going to the moon. It's going to have a nice steady increase over the next 3 years and hopefully be profitable in 3 years. Now, I don't have that crystal ball. No one does. And currently, I do not own a position in this company. And I definitely would not own a position in this company with a 10-foot pole at the current price point. There are huge spike volumes that are ripping the stock price from its underlying fundamentals. And get this, in 2018 at the IPO, there were only 7 million shares outstanding. In 2018, those shares have doubled, but in 2020, 133 million shares or potential shares are out there if warrants are converted. Lots of those IPO warrants estimate the executable price at or below $1.60 a share for all outstanding warrants. The company has also been raising significant amounts of capital with early but only limited successes to date right now. The research and development costs continue to grow. Now let's bring up the most quarterly 3 report that came out on the company, and I definitely want to go over a couple of these statements that they put in here. Now the most recent quarterly report states, we believe based on our current business plan that our existing cash and cash equivalents will be sufficient to fund our obligations into the first quarter of 2021. Our ability to execute our operating plan beyond the first quarter of 2021 depends on our ability to generate sales and obtain additional funding through equity offerings, debt financings, or potential licensing and collaboration arrangements, and our ability to maintain compliance with these terms of our debt financing agreements. Then it goes on to list the potential reasons and influences on why they will have to raise additional capital after massively issuing stock in 2020. This going concern verbiage is required, yet it paints an entirely different picture of the company than what is currently seen on the message boards right now and comments. Let's go back here. Now, in the long term, the stock price is drastically overvalued, well ahead of the future business prospects, Bionano Genomics, and I have a strong sell position at the current stock price of $9.14 until it reach earthly reasonable numbers somewhere in the $1 to $2.50 a share. That's my buy-in point, $1 to $2.50 at the current price. I predict that there will be a future price correction on this stock, and it'll probably just sink overnight. But who knows? I don't have that crystal ball. What are your thoughts? Please comment down below. Now, I would buy only near the target price point and target a 2 to 3 year time frame from now to be able to sustain approximately a $10 a share price point, with the valuation going up and up, or maybe even between a $10 to $20 price. But that's only if they don't dilute their company even more. Now, if the company continues innovating, increasing revenues, and its forecasted estimates stay on course, then hey, I can see a possible $10 to $20 sustainable price in 2 to 3 years. Then again, any future dilution will affect my future projections. If you're a day trader on this one, this might be the one for you, and because you're going to be basically trading those big price fluctuations. I would have to say I do love this company. Let's bring it back here. Yes, I do love this company. What they're doing is great, and I think they're on the right track, but it's just definitely not for me in the near term at the current stock price of over $9. So if you like this video, smash that like button down below and consider subscribing. If you'd like to hear financial news that could benefit you, I'll be doing more stock updates soon. Talk to you soon. Ciao.